Yeah, well, keep in mind though that the flows, just one quick mention before we get to our guest, fundamental guest Avinash Gorakshekar joining in. Keep in mind the one other thing to monitor is that after a really long time, we had a small positive trickle from the FI side, a small minor bump up on the positive in Friday's session. Let's see if it gets converted back into the red in today's trade. Avinash Gorakshekar joins in right now with his thoughts. Avinash, good having you. Thanks so much for joining in. A clutch of financial names made their way back positively in Friday's session, as also the better part of last week. Avinash, would you sell into the strength in some of these because we don't seem to be out of the woods as yet? Or are you a buyer here?
In fact, Neeraj, as far as the financials are concerned, we still continue to be a little cautious on the NBFC space. Our sense is that private banks offer a better opportunity and could be a better franchise to park money at current levels. Although the kind of headwinds we are seeing in the markets, especially for the next 1 or 2 quarters, is extremely challenging. In fact, in the near term, the markets obviously have seen significant price damage, but now I think the markets would clearly watch as more and more volume data and industry data comes in. I think the latest could be the auto numbers, which could be released very soon, and that could give an indication as to what kind of impact the lockdown will be having on large sectors like autos, auto components. So I think it's going to be still a very challenging period. I would not be surprised that the January to March quarter as well as the April to June quarter is going to be extremely challenging. So I think within private banks, ICICI Bank, or maybe for that reason, an Axis Bank, which has been battered down badly, could be acquired. But from a longer term perspective, in the short term, I would believe that volatility would still continue to remain. Exactly, Neeraj. I think although now the Halol facility doesn't contribute, 4 to 5% at best to the consolidated revenues. What the markets would be really looking forward is if this is followed by any warning letter by US FDA. In fact, that could be a big negative surprise. In the near term, the stock could open a little weak because markets would definitely be a little cautious as to now what could be the next course of action. But I think clearly within the pharma pack, there were a lot of expectations that the Halol facilities could get restarted, and after a long time, revenues could flow in here, especially for the US market. But with now this news flow, I think Neeraj, it's better to wait and watch. Definitely, this is not a positive news flow, and the stock could open a little weak. Any further management commentary and US FD action could only give a further kind of direction to the stock.
Okay, Avinash, let's talk about a few other names then. And now that we've been seeing the way IndusInd Bank is trying to make its way back, do you feel that now they've also had some interest payments that they have repaid right now from the private sector banks? Would you still prefer the likes of HDFC or the likes of an ICICI, which also has been beaten down quite badly, versus an IndusInd Bank or an Axis Bank?
No, I think all the private sector banks which you mentioned, especially ICICI Bank and Axis Bank, would obviously figure out first in the list if one has to take a long-term view on the private banking space. I think Axis Bank has been beaten down significantly. Trades at a fairly attractive price to book, and I think despite concerns in the industry on the lockdown affecting SME and the MSME sectors, I would believe that at this point of time it would be better to stick to dependable and stable names like ICICI Bank and Axis Bank. IndusInd Bank, I think I would prefer to wait for at least a couple of quarters where one could see what kind of traction happens on the NBFC business, especially the commercial vehicle financing business, which is going to face a lot of headwinds, at least in the near term. So ICICI Bank and Axis Bank, Devina, would be better choices, and that too on market declines, considering that markets are going to be extremely volatile, and whatever rally has happened last week is unlikely to sustain on a regular basis. So we could see a bout of selling. So it's better to buy on declines and keep a longer term horizon here.
Okay, longer term horizon, buy on decline, still not the right time to buy. Remember, we've been having a whole host of conversations, and all our market experts are of the opinion is that you don't need to rush into such a market. I wanted to ask you about Delta Corp. Obviously, now business is completely at a standstill, but the management is offering to buy back shares at about 100 rupees price not exceeding 100 rupees.
No, I think Devina, the buyback price is definitely attractive, but this kind of buyback is not going to induce investors to actually re-rate the stock significantly in the near term. I would believe that a lot of retail investors would obviously opt for offering their shares, which is almost double the current market price. What is more important is at least for the next 6 to 8 months, the tourism sector where Delta Corp actually operates is going to face a lot of uncertainty and a lot of incremental kind of losses, considering the fact that normalcy is going to take a long time. So I would believe that despite the fact that the company is offering a very attractive buyback price, I would not be surprised that the stock may not go anywhere, at least in the near term. I think markets are more fearful about the financial impact on the business, and which is going to take a long time to recover. So I mean, net it's a good offer from the company, but definitely not enough to induce a kind of a big re-rating from the current odd level. So at best, a small bounce on the stock could be seen, but definitely, which a lot of investors would actually not buy into and actually sell into the price.
Right, that is Delta Corp. Really not, right now is definitely not the right time to get into it. And probably to have shares to tender, maybe tendering them at a price of about 100 or whatever is better.
That's the option that I want to ask you, Avinash Gorakhshekar. HDFC Live, another 2.5% lower in the first minutes of the pre-open session, but it may change, of course. But what insurance is probably a business that will not get too disrupted, because people, if they are buying insurance, that continues. It's an annual payment that you have to do. You don't kind of tinker around with it too much, and there has been a bit of price damage which has been bought into for HDFC Life, at least. Not so much for SBI Life, not so much for ICICI Pru. What do you do here with this package, in life insurance at least?
No, I think Neeraj, you're right. The insurance business is unlikely to see significant margin damage, at least in the near term. Although the fact remains that Q4 is supposed to be the best period for these insurance companies. Our sense is that HDFC Life, whatever overhang the OFS had, has already been factored into the price. And I think if somebody were to take a longer term view on the business, then I think insurance companies definitely offer a very significant risk reward for a long-term kind of risk reward, considering that these businesses are more stable, they have very strong balance sheets, and I think considering the fact that insurance is a very basic need, I would not be surprised that the case of any defaults or delays in these payments would happen. Although maybe the next one quarter could be a little bit challenging, but yes, HDFC Life and SBI Life, both these companies could definitely be acquired by investors if one were to take a longer-term horizon, and the risk reward could definitely pan out better. Near term, I think it would be a very difficult thing to visualize how much time these companies would take to get re-rated. But yes, the business definitely continues to remain a very rock solid business where once clarity emerges, I think you could see a lot of buying coming in even at higher levels.
Avinash, would you feel that maybe if levels are attractive enough, prices are attractive enough, TCS, Infosys, and the larger names could be looked at?
I think from the IT space, the kind of comfort one derives is that these are basically cash-rich companies with very insignificant amount of debt on the balance sheet. I think what is important, Devina, is incrementally how the order wins come in, because clearly with US and Europe getting impacted significantly by the virus, I would believe that the next 1 or 2 quarters could be a little troublesome for large companies operating in these geographies. And despite the fact that these companies have a large order book, I would not be surprised that incremental order wins are something would definitely be impacted. So to that extent, these companies could be held on. One could even look at buying these companies, but from a longer term horizon. In the near term, I would believe that earnings, at least for the next couple of quarters, would obviously be impacted. So to that extent, they are relatively much more safer than the brick and mortar companies, which could possibly take a longer time to get re-rated.
Okay.
We've been talking a whole host about how this particular lockdown is going to impact. Now with factories, Avinash, and this is for you, with factories shutting down and not running at full capacity, the demand for power is also coming up significantly. In fact, we've seen the demand for power has also come off by more than 25%. What do you think this does for some of the power generation companies?
Devina, I think clearly the next quarter, especially the April to June quarter, could be a very challenging period because, as you rightly mentioned, with the lockdown, there is a complete shutdown of production capacity. There is no production, and obviously offtake from industrial customers have considerably reduced. So obviously, till the time the lockdown is not lifted and production does not normalize and consumption does not pick up, you could possibly see a little kind of pressure on these power generators also. And I think despite the fact that this is a utility and normal consumption does not get impacted, we could possibly see a little distortion in their volumes at least for the next 1 or 2 quarters. But I think clearly as normalcy picks up and once the lockdown is over, you could see this segment definitely coming back. But in the near term, yes, there are challenging, and I think it's better to at least wait for 1 or 2 quarters before you see the financial impact of the lockdown on the financials of these companies.
I'll ask you a slightly difficult one. If somebody wants to park some money into one of the two names, Bajaj Finance versus HDFC Bank, what would you recommend? Yes, or one between the two, or both, or none?
I think, Neeraj, I would believe that HDFC Bank is a much more stronger candidate in the current scenario. NBFCs per se are going to face a lot of challenging headwinds, at least for the next 1 or 2 quarters. And despite the fact that Bajaj Finance is well capitalized, has a lot of liquidity, I would believe that now the key challenge would be the EMI payments and possibilities of any defaults or delays from their customers. So my choice would be HDFC Bank. I think any decline here should be used by investors to actually accumulate HDFC Bank, where I would believe that this could possibly give a decent risk reward in the given scenario, in considering that the next 6 to 12 months are going to be extremely challenging for NBFCs.